Okay, we are recording.
Well, I have 3 o'clock on my phone here, so for the sake of timeliness, we'll go ahead and get started. Thank you all for taking the time to join us today. It's kind of some unprecedented times that we live in, and we really don't know exactly what to expect in our daily lives or in the industries that we work in. And so we wanted to host this webinar to provide a little bit of data, provide a little bit of insight into what we think might happen, what are the areas of concern, what things to kind of think about. And so as we get started here, I think we've got everybody's microphone on mute. If you don't have it on mute, please do so, so that we don't get any background noise. The agenda for today is I'm going to provide a little bit of an overview for the markets and the industry, kind of set the stage. I would imagine there's a lot of different people from different backgrounds that are on the call or on the webinar today. So we'll provide a little bit of a landscape and talk a little bit about how the markets may be affected, thinking about the overview of the markets and the industry. And then I'm going to turn it over to Dr. David Anderson, and he's going to talk about the traditional lamb trade, provide his insight into what he foresees the market's doing into the future. And then Mr. Bill Thompson, who's both of those gentlemen are economists, is going to talk about our non-traditional lamb and goat trade, which is the primary trade here in Texas. Dr. Pope unfortunately can't be with us, so I'm going to give a little bit of a presentation and talk about some slides that he put together on potentially the wool market going forward. So that's kind of the overview today. Hopefully we'll have some times for a little bit of a Q&A here at the end, but we'll go ahead and get started. So first and foremost, I always kind of like to show this slide when we're talking about national issues, and that's just kind of where the sheep are in the U.S. And I think it's important in times like this because infrastructure is important and trade is important, and where they're going and where they're being produced. And so I recognize that this slide's a little bit dated. It's from 2007, and we probably have fewer sheep than we did in 2007, but regionally they're still distributed kind of evenly as they were that many years ago. Texas is the largest sheep producing state, but you'll notice the majority of those are kind of centrally located in the Edwards Plateau, right around where Bill and I work in San Angelo. Texas has become primarily a non-traditional state, going non-traditional lambs as our primary market, and I'll kind of exemplify that here in a minute. Then the biggest bulk of sheep are in the West, either the Midwest, the Intermountain West, or kind of the West Coast. There's definitely some non-traditional trade in those regions of the U.S., but that's still a pretty dominant traditional sector. When I say traditional, is they follow kind of more Western market structures. And so that's kind of where the lambs are located. The majority of lambs are harvested either in Colorado, California, or the upper Midwest. And so in the traditional sector, most of those lambs are weaned off the ewes. They're sent to a feeding facility. They're adding another 40 to 80 pounds on those lambs before they're harvested. And then at the packer, they're being processed into retail ready or restaurant ready type packages and distributed from there. The non-traditional market, across the U.S. and primarily in Texas, those lambs are sold straight off their mother at generally the market weights that the non-traditional consumers want. And then they're distributed to major metropolitan areas in Texas. A lot of them are going to Houston, Dallas, San Antonio, and other major cities throughout the East and basically spread across the U.S. Next, or advance one more, Bill. So when we look at breeding sheep, the top producing states, Texas is the top state with just under 600,000 ewes. I think NAS said we were down 2% this last year. However, Bill will show some data a little bit later indicating that we're selling more lambs at auction than we have in the past few years. So I'm not exactly sure how that's lining up. And then the next 4 out of the top 5 are California, Wyoming, Utah, and Idaho, primarily more traditionally oriented production. Next slide. So at the end, I'll talk a little bit about the wool markets, but I wanted to show the top 5 states to exemplify the change that Texas has occurred recently. And so Texas has the most sheep, but we're not even in the top 5 for wool produced by state, just exemplifying that it's gone to a hair sheep state, whereas California was the second in breeding ewes, but they're first in pounds of wool shorn. Colorado moves up to second, primarily probably because there's all the feeder lambs that are shorn in the feeding facilities in northern Colorado. And then you have Wyoming, Utah, and Idaho. Next slide. So when we think about the meat goat industry, you know, Texas is far and away the biggest meat goat state. And, you know, you can see the dots here. Now, these don't represent exactly like the sheep map before, because each dot was 1,000 ewes. In this chart, each dot is 200 meat goats. So it looks like there's more meat goats than there are if you're comparing apples and apples. But Texas is the biggest place where there's a big commercial sector for the meat goat industry. And I believe the last time we looked at it, if you add up the next 10 states, it takes like the next 10 or 11 states combined to get the same number of meat goats. And I say that primarily because that indicates how Texas has done well with the non-traditional market, because the non-traditional consumers are generally wanting lambs and goats. And so if they're coming to auction yards to get semi-loads of goats, they're going to get their lambs, their lamb procured there as well. Next slide. So it's not just domestic supply. We also got to be thinking about the import supply. Again, this chart's a little bit dated. It's out of our white paper that we produced on the seasonality of the U.S. sheep industry. And the brown bars indicates domestic supply of lambs, and the red bars indicates imports. And so imports have been on the increase the last decade or so, and now easily exceed domestic production. And so that's important if we think what's going to happen with demand, and if demand gets pulled down, are those imports going to be still coming in and competing in the marketplace, or some of those import supply going to be restricted due to restricted travels? And we'll kind of have to wait and see how those things move forward. Now, I generally think of imports, especially on lamb, as a direct competitor to the traditional lamb sector. And there's not as much competition in the non-traditional side. But Bill will show towards the end, there's a fair amount of imported goat meat. And that goat meat is definitely going into the non-traditional sectors. You know, and I've seen imported goat meat at different ethnic retail outlets across the U.S. So next slide. So as we think about demand and supply, we also got to think about the seasonality of it. And so, as you're all probably very aware, lambs, the majority of lambs, somewhere in the neighborhood of 85%, are born in the first 5 months of the year. And then our industry has to, you know, speed up or slow down those lambs to create that even supply throughout the year to the processors. So the brown bars are USDA federal slaughter rate, and you notice they're fairly even across the year, but most of those lambs are born early. So next slide, or next advance, please. So, you know, it doesn't encompass all of them, but as we kind of think about it, most of the traditional lambs that are born in the first 5 months of the year are coming back to the market, or the biggest volume of them in those same 5 months when those lambs are around a year of age. So if we think about this COVID-19 and things occurring that are causing market disruption, we have to recognize that this is right in the middle of our biggest peak supply season that those lambs are being harvested in. This is not necessarily the same story for non-traditional. So advanced slide, please. So if those lambs that are born headed towards the non-traditional supply are still born in the first 5 months of the year, they're being harvested at roughly half the weights, which means it's taking half the amount of time to get there. So that supply season in Texas is generally starting to pick up now in April, but we really see increases in supply May through September. And so that's when we have our biggest supply, and generally our markets come off some due to the excess supply compared to the rest of the year. Next slide. And then we think about when is the seasonality of imports. And so this graph just represents when imports come in, and they're fairly steady throughout the year, except you'll see an uptick in March, which is definitely leading up to the demand or for the Easter demand that's coming on. And you also see a slight uptick in the latter part of the year leading up to Christmas. So those imports are following our demand cycle, which we'll talk about a little bit. The next slide. So this graph shows retail lamb sales throughout the year, and generally in the retail sector, we're marketing around 4 million pounds of lamb per month, with an uptick at Christmas. For the Christmas holidays, we jump up a couple of million pounds, and our retail sales of lamb generally almost double for the Easter holiday. And that's really concerning now, because we're expecting the consumers to buy a lot of leg of lamb here in Easter, but churches are going to be shut down. People aren't going in, so they're still going to have those Easter holidays. Hopefully people are stuck at home and they've got ample time to cook a leg of lamb like I did the other day, and we will see those increase in sales. I did see an email from the American Lamb Board that indicated a 50% increase in retail sales a couple of weeks ago, right when this COVID-19 scare really started occurring and everybody was buying out the grocery stores. But that's only 50% of it. The other side of it is half of all the traditional lamb sales are going into restaurants. And we all know that our restaurants are basically shut down. They're doing some takeouts, but from what I can tell, those takeouts are a fraction of what their business used to be. So if half of our traditional sector tended to go to the restaurants and those are shut down, that's very, very concerning. Next slide. So when we switch gears and think about the non-traditional market, this comes off of Gillespie Livestock, their webpage. They list the important holiday calendars because it is that important to our markets down here. We just touched on Easter, which is generally more for the traditional demand. But towards the end, or towards the middle to the bottom of this, there's two Islamic holidays that a lot of our industry kind of focus on. There's a good steady demand for ethnic lamb year round, but there's definitely an uptick in that demand leading up to the two holidays that I'm most familiar with would be Ramadan and the Festival of Sacrifice. So Ramadan starts this year, April 24th, and it goes through May 24th. And so if you're unfamiliar, that's a month of fasting. So Muslim Americans would not eat or drink throughout the day, but then would have hopefully a big meal of a lamb or a goat meat as their meat entree at night. And then there's generally some celebration that occurs towards the end of Ramadan, and again, focusing on lamb or goat meat towards the end. So this is a big time to sell more of this product into those markets. And will we have market disruption that doesn't allow them to get them? Or, are people being mandated to stay home, and maybe hopefully there's an increase in retail sales? We'll have to see. The other holiday to be aware of is the Festival of Sacrifice. I should mention before Ramadan, most of the lambs in Texas that are going into that the premiums are being paid for is about a 60 to 80 pound lamb and about a 50 to 70 pound goat. And so that's the general window that they really like. They'll consume them on both ends of that, but that's their target market. Whereas the Festival of Sacrifice, they're taking much larger animals. Festival of Sacrifice this year would be July 31st. Is kind of when it gets started. And this is where, the unblemished animals are more preferred. So tail on with testicles, horns, no ear tags, no markings and things of that such. So what'll happen with COVID-19? Will we still be in shutdown towards the end of July? I sure hope not. But that's something to have in our mind as we're thinking about marketing these animals into the different markets that they're best suited for. Next slide. So from a takeaway, from just an overview standpoint, I just want people to think about it and make sure they're aware there's two different lamb markets, whether that's traditional and non-traditional. And the traditional side, we're kind of even split retail restaurant. And we also have to think about what that harvest and distribution looks like. Fortunately, agriculture is an essential thing to our government. Our government looks at it as essential, so we're not shutting down people's ability to transport and move. And those workers in agricultural facilities are not being told to go home, to my knowledge at this point. And so that's an important point. And then also, how are imports going to come in? I think I heard that New Zealand, I see we have some people on that may be able to address this more accurately than I, but I think New Zealand has been shutting down their exports as of current. So that may reduce that import supply. And then, be aware of your seasonality of supply and seasonality of demand and how that fits with this whole, these whole issues. And then, be cognizant of that supply chain infrastructure. And if they're, be talking with the people that you market to make sure that there's not things that are going on that may not allow you to market your product. So with that, I'll stop and turn it over to Dr. Anderson.
Hey, thanks, Reed. Let's jump in on some traditional lamb stuff. Really, I'm going to talk some about expectations, what we're starting to see in terms of prices in the marketplace, some expectations over the next few weeks and months, and take a look at a number of these areas. I think the first thing that's most important to recognize is that more than half of our lamb goes through restaurants. And so certainly as we see restaurants closing, restaurants trying to do some takeout business, to go work, I think this is pretty serious in terms of future orders for lamb. And I talk about that much more so in terms of whether we think about other meats, beef, pork, chicken, and the like. We're much more dependent on the restaurant trade. And so as we see the continuing effects of this, I think we're already seeing declining orders for lamb. We're seeing that whole shift, trying to move more to grocery stores. Yet, as we look at going forward with this, with the potential for slipping into a recession in the second quarter of this year, which starts today, I think we'll see one of the expectations is some more damage even to grocery store service as they try to move to what they can move with in a climate of rising unemployment, declining incomes, and shrinking gross domestic products. So it really hits us on the lamb side quite a bit more than some other meats that are certainly cheaper. So, I think we'll certainly be talking about, I think, some significant damage to food service sector of our industry, to those markets, and then balancing how much we can recapture in the grocery store side of it. And particularly this hits at a time when, really our peak of movement, the Easter market, this spring market for lamb, this is a pretty critical time. I think we'll be talking as we go forward a pretty significant demand destruction, really driven by, again, these fears of slipping into a recession and that loss of demand. So if you're thinking about, putting it in some context, if more than 50% of our lamb is going through restaurant trade, and we've got a significant number of restaurants closed, particularly on the East Coast where we move so much lamb with those large consumer areas, it's pretty easy to come up with some pretty significant expectations of declining demand. And I think lower lamb prices, both live prices and meat prices, because of it. So Bill, let's jump ahead. I want to show a couple slides here of really lamb prices. One of feeder lambs at San Angelo, lightweight. And as I talk, I'm going to use some of those traditional terms like feeder lamb and slaughter weight lambs, but really a weight type of determination. As we talk as we sort of interchange traditional and non-traditional markets in there. But we had been seeing certainly prices above a year ago in these markets going so far this year. Yet, the expectation is, what can we continue to carry these prices at as our retail markets are drying up on the restaurant side? On the feeder lamb side, we tend to see some increase right before our Easter holidays. We see some declining prices right after that, and then declining in these lightweight lambs on into the summer and early fall. But if we look at the next slide, we're talking about a slaughter lamb price, something in the wool, 100, heavier weight lambs. This happens to be Sioux Falls, and take a look at this decline. The construct of these charts I'm going to use kind of follow the same pattern, with the fat red line being a 5-year average, the dotted line being 2019, and the blue line 2020 so far. I think we're already starting to see the effects of this slowdown and canceled orders, canceled sales on the retail side, and the processing side supplying the restaurant trade. I think we're already seeing it in slaughtered lamb prices. While it shows up in the weekly data, really ending or from my charts dated March 30th, but really reflecting last week's sales, I think anecdotally we're already seeing even lower bids, and in some cases no bids for heavyweight slaughter lambs. And so I think we're already starting to see the effects on the lamb market based on some expectations of what we're going to be able to sell in the future. So if we jump ahead to the next slide and start looking at the wholesale market as measured by the lamb cutout value, one of the interesting things that we see is we don't see a whole lot of effect yet from canceled sales at retail rolling into backing up into the cutout value. One thing I would point out is we certainly had a cutout value or wholesale value of primal cuts of lamb well above a year ago's levels. I would point out that also includes AMS changing the calculation of the cutout starting January 1. And so a little bit of that increase is due to some calculation changes. But, I think one of the things we'll be expecting to see is some declining values going forward as those sales begin to disappear at retail and back up through the supply chain. But, I think for completeness, take a look at the cutout value and where we are so far. So the next slide, Bill. Thanks. Usually when I get asked to do lamb market outlook, oftentimes I call them the usual suspects. There's three things I really want to think about. One is imports, one is stocks, cold storage stocks, and the other one is I usually boil down to weights and our own domestic production. If we look at imports so far, we started out the year in January below a year ago, but above average. There is a delay in the import data that we get. There has been some slowdown in imports related to this coronavirus disease, but particularly in some of the shipments of lamb, air freight shipments from Australia. Yet we continue to see trade from Australia and New Zealand going forward. One of the things that I expect we'll see is we continue to see imports coming in. Some of these imports I do expect will end up in cold storage, particularly that we import racks, for instance. And so as we go to the next slide and we start looking at cold storage, we've already got increasing levels of cold storage. The data goes through February, but with those imports and again with some domestic production, one of the things I'll be looking for is going forward is I think we're going to see some even more burdensome level of cold storage stocks on the market, simply because as those retail sales dry up to some extent, whatever we can move through grocery stores, it may be that higher priced items like the racks, the loins, some of those start to go more and more into stocks. But perhaps we can move some lower priced items, your ground lamb and other things like that. Maybe we can move some more of those in grocery stores, but I still think we'll be looking at some growing levels of lamb and mutton in cold storage as we go through the next couple of months. And you know, as we look at this, you look at last year in August, we had over 45 million pounds in cold storage. That's a pretty significant proportion of our normal monthly production or total supplies on the market. And certainly we've had years in the past where cold storage, the amount that we have in stockpiles are large enough to really pull our market prices down. And so I think we're headed for another one of those situations as well. One of the other things that may affect cold storage is certainly our own domestic production. If we go ahead, Bill, to the next slide, we've got lamb and yearling slaughter. One of the things I would point out, this is weekly slaughter. Leading up into April, you know, into this month of April, we actually were, our federally inspected slaughter was below a year ago for several weeks. And if we combine that, our slaughter with the weights of those lambs, which is the next slide, we look at weights continued who have run below a year ago so far this year. So one of the things that I think has helped us in over the last few weeks, at least going into this, the effects as we really ramp up the shelter in place and quarantines and things like that, is the combination of some slaughter being a little less than a year ago and weights being lower. If we look at production, the next slide, we've actually had lamb and mutton production below a year ago over the last number of weeks. In fact, most weeks this year, production has lagged below a year ago. So we've had a little less production on our market, and I think that has helped to boost supplies. And certainly compared to a year ago in the 5-year average, production is quite a bit less. So I think that's actually helped us over the last few weeks and may help us a little bit going forward. But one of the fears that we often have in this, and I think history kind of bears this out, when we get into some times of sharply declining prices, we do tend to back up supplies. We tend to back up lambs through feedlots, through cold storage. We get overfinished lamb and we see an increase in our weights, our slaughter dressed weights, and we start seeing increases in production. One of the things I'll be watching for going forward are those weights. Do we start to see weights increase? And then that translates to some larger production figures as well, and a lot more overfinished lambs on our market later on. So kind of those usual suspects of imports. Imports, we continue to import. The relationship between exports from Australia and New Zealand to China, to those places, how those markets develop. And do we continue to be an attractive market for lamb even with depressed retail prices and depressed wholesale prices? I think will go a long way to tell them about where we go with imports. But again, imports, rising cold storage, and the potential for backed up production as we go through this year, I think are pretty critical factors going forward. Next slide, Bill. And that's it for mine. I think if I was going to sum it up, again, those usual suspects, and we already see declining slaughter, lamb prices, and really what appear to be shrinking sales at retail, and largely that important restaurant trade, particularly on the East Coast going forward. With that, Bill, I talked fast, but I'll turn it back over to you and let you talk about non-traditional markets for a bit. Thanks.
Okay, thanks, David. Real quickly, just some very, very generalized differentiation between these markets. Reed's already kind of identified some of this, but when we're talking these non-traditional sheep that we raise here in Texas, they're typically not sent to a feedlot. Reed's already mentioned they're basically sold right off of mom. And they're typically not sent to large centralized processors. There's numerous smaller processors spread out across the East Coast, or basically anything east of us that handle that. So because of that, I think there's just slightly a little bit less risk for our non-traditional markets. We might get David to come back online later and talk about some issues with some slaughter capacity on the traditional side. But as far as the non-traditional side, if one or more of these smaller processors is shut down, either to not enough employees to run the facility or the need to sanitize the facility, we're talking about a much smaller percent of slaughter capacity for this non-traditional market, and I don't think it's going to have as much impact. I'm more worried about the income effect of a lot of people not working, affecting the non-traditional markets. Also, these markets, the non-traditional markets, do in fact want a smaller carcass, and they usually buy whole or portions of carcasses rather than individual cuts. Here are our San Angelo slaughter lamb markets. David showed us some traditional slaughter lamb prices, somewhere in the neighborhood of 130 pounds or so. The animals that we sell as slaughter lambs here in Texas probably are weighing 65 to 75, 60 to 80 pounds, somewhere in that range. And you can see we started the year well above last year, which is the blue bar, and then the red, the green dots are a longer term average. We started the year pretty strong. Prices have started to come down, but the seasonality suggests they were going to be coming down anyway. This is actually a weekly price, and you can see those prices last week actually came down pretty hard, but again, we're above where we were last year, which is positive. We'll just have to keep an eye on things and see how things progress. I just got a report from the sale yesterday, and it looks like we're down pretty hard again. But again, I'm thinking we're still probably on a weighted average basis, still probably going to be comparable, if not higher than we were last year. I post some tables here that have a lot of good information on it. What we're looking at here on this middle column are our slaughter lambs here that go through San Angelo. You can see the prices for the last 10 years. And you can see we had a really good year in 2015. Our poor years were in 11 and 12, where we had some problems with lots of fat lambs being slaughtered, a lot of lamb going into cold storage, and that played heck with our prices here in San Angelo. The other thing I need to point out, though, is back in those years, 10, 11, 12, the industry in Texas looked a whole lot different. We had a lot more Rambouillet sheep running in the country, and now we're almost exclusively hair sheep in this area now. So the market does look a little bit different, and anything that affects that traditional market, I'm not sure that I know exactly how it'll play out here. But you can see the last couple of years, again, 2017 was a pretty good year, but we have these prices aren't bad, so that's a positive. The other thing to look at here that's kind of interesting is the volume. You can see there in 2019 we had a huge increase, or a pretty substantial increase, over the year before. Keep in mind, we had to destock the country in the drought of 11, and then we started building back since, and we've largely been building back. The market has turned over, and we're selling mostly hair sheep through this auction in Angelo now. But keep in mind, I'm going to come back and talk about the impact of some of this increasing volume. This is my seasonality chart, and I always show this to folks to show them what the markets do. You can see there in both the 10-year and the 5-year seasonal charts show that the markets start coming down. We hit a high in February and we'll trend down, and typically we hit a low in June and we don't move much till about September. We start to see some prices start coming back. I'm going to overlay a volume chart over that, and it's plain simple supply and demand economics. When we have the big run of lambs coming to town, we overwhelm the markets, if you will. There's lots of supply and prices are lower. We had a little bit of an issue back in 2018 in October, and that's what's drawing that shorter term seasonal chart, makes that funny little drop there in October. That's due to basically one year that we had in 2018. But you can see here, so far this year, at least through March, the market was performing kind of like we'd expected it to. This chart's got some interesting information, and it's going to come back to, I'm going to use this to base some of my take-home points, if you will. The blue bars that you see in the background are the 14 through 18 average monthly volume through the barn here in Angelo. The green bars you see are actually last year's monthly volume. And you can see there in March, April, and May, the number of lambs that we brought to town were considerably higher than that longer term average. I'll admit that those numbers had been building all along, so that's not necessarily a real fair analysis, but at the same time, it drives home the point. In those months, we brought in a lot of lambs, and it pushed the prices down. We typically see prices drop or hit bottom in June. We did, in fact, see those prices in June was where the low was, but we weren't far from that back in April. And again, it's just the fact that we had so much more volume coming in those months. The reason I want to hit on this as a take-home point is what I recommend folks not do is say, well, I think I'm just going to hold tight and sit on things and see what happens. Let this coronavirus thing get past us. I'm afraid if too many people do that, we're just going to start backing things up in the country. And when we do start bringing them to town, we're going to overwhelm our buyers, and we're going to have we're going to hit them hard, and we'll really see some low prices. So that's some of my concern with that. You can see down here in some of these later months, August, September, we were actually below the longer term average. And again, this is in a year where we had a huge increase. Supplies were down, and from that point on, prices really rebounded pretty strongly. So I think there's some good take-home points to pull out of that particular graph. Just summarizing on the sheep side just a little bit, the markets have been pretty strong. We're well above the 11 through 13 recent lows. There seems to be pretty good demand for our non-traditional markets, and we really haven't had any real major hiccups other than a couple dry spells since 2011. We need to keep the inventories current. I'd really not want to see things back up in the country too much, just because when they do come to town, we will overwhelm those buyers and things will get sold. But once the buyers get what they really need, everything else will move through at a pretty discounted price. When looking at some of our seasonality, we need to keep in looking at the seasonal movement there. We need to kind of keep in mind some other factors that could be affecting this. You know, I'm a fan of maybe managing to work around those seasonal patterns more than chasing some religious holidays, but that's personal preference. But I would, in looking at that seasonality stuff and what's laying in front of us, possibly on the traditional side of things and things backing up, I'd really suggest that guys look at marketing earlier rather than later. Mostly for a risk management side component to things. The other thing is you guys might look at LRP. Almost nobody buys LRP, at least here in Texas. It's a product that's out there. It's still available. You might look and see if it's got something that has some appeal to you. Here's a chart for our goats. The goat market has been extremely strong. You can see where we've been this year, well above last year. And again, the prices have moved kind of like they did last year. Things have been pretty strong. And you can kind of see the pattern there. We typically will bring a lot of goats to town July, August, September, and that pushes our prices down. Kind of the same price format here. Looking at some of our kids, you can see what the goat prices have done the last 10 years or so. We've got some tremendous goat prices. When I throw some, I'll give you guys some import data here in just a second. And that's pretty impressive that we can actually maintain these prices with the type of imports that we're seeing on the goat side of things. And to be honest, I didn't realize that we had as many goats being imported as we do. And here again, some of the volume that you can see here. Volume in San Angelo actually dropped in 18, but we got some of that back in 19, and not sure exactly what caused that, but gives you an idea of what we're looking at volume-wise. Some issues with the goats. You can go to some ethnic communities across the country and you can find goat on menus, but by and large, you know, in the grand scheme of things, goat really isn't on very many menus. So I don't think the goat, the closure, the temporary closure of restaurants, again, I don't think it's going to affect our goat market as much. And again, the supply chain may be more resistant to outside influences. I don't think, you know, again, these aren't processed in large processing plants. I don't think the COVID will have much impact there. The issues that I'm concerned with the number of businesses that have closed, the number of people that maybe are not working, I'm a little concerned that that's going to play heck on the demand. And that's the big unknown that I see on the goat side of things, is just how will people be able to afford goat. You look at some of the prices that or think of some of those prices earlier, and then, you know, start taking some yield figures to that, and that makes for some pretty expensive meat. I'm a little concerned that that some of those folks may look at some cheaper meat purchases as we go through the next few months ahead. Again, there's the seasonal patterns. Again, we got what this chart is telling me, though, that for April and May, typically we have some pretty good prices. We got pretty good prices ahead of us for the next couple months. Typically, on average, these are 5- and 10-year seasonal averages. But then once we get to June, things will start trending down. And again, June, July, and August typically is the trough in our price market or price pattern. So that, again, with everything that's going on, I would probably suggest that guys market earlier rather than maybe a little bit later. Here's some of our goat import stuff, and this is kind of interesting to me, because again, I just didn't realize we were importing this. I first started looking at this a couple years ago, so when I say I didn't know about it, I've known about this for a couple years now, but it's still kind of impressive. We're bringing in, you know, let's call 2019 somewhere near, we'll just call it 18,000 metric tons of goat meat is imported. And with a value of, you know, let's call it $135 million. That's a lot of goat. So that's interesting that we can bring in that kind of goat and still keep our goat prices as strong as they have here in Texas. Again, there's a lot of folks that do want to consume goat in the U.S. Just to also put this all in perspective here, this is what the blue bars that you're looking at are just estimates of Texas meat goat inventory. And then that red line is what we're trying to estimate as the estimated annual sales of goat here in Texas. We're in the process of finalizing the 2019 data, so we don't have it yet. But, you know, again, looking at 18 levels, again, we're right around that $130 million stuff. So we've actually got more than the next 12 states as far as meat goat inventory in Texas. And so we're by far the largest producer, but we're importing about as much as we're selling here in the state of Texas. The source of the goat imports: Australia, New Zealand, and Mexico. And Mexico is a distant third from the first two. So we're going to talk. We've talked about it a little bit. We're going to probably talk about it more when Reed gets to talking about some of our wool. But the exchange rates have a large impact on imports. If we've got good prices and the exchange rates works in those favor, they can bring stuff over, sell it for a pretty strong price, and then because of a strong dollar, when they go to exchange that back to their own currency, they make out even better. So the strong dollar makes our stuff a little bit less competitive, but it makes it a lot more attractive for people to bring stuff to our shores. Goats, lamb, wool, certainly being prime factors here. You can see from the beginning of March till just late March, we had one heck of a run up in the value of the dollar. And again, that comes back to when there's chaos in the world, the rest of the world does flock to the US dollar, and they want the stability of the dollar. We sometimes question the stability of our own dollar, but relative to the rest of the currencies around the world, this is where people want to park their wealth temporarily when there is chaos in the world. So those exchange rates have moderated just a little bit, but they're still quite a bit higher than they were even back at the beginning of the year. Just want to make a real quick plug for a lamb and goat market forecast app that Dr. Redden and I put out just last year. It's a pretty handy little tool that estimates the marginal revenue that one can expect from keeping a lamb for another month or a kid goat for another month. You can see that the assumptions that we make as far as how much weight they're going to gain. We allow the user to estimate some cost of gain in there, and it does a pretty good job of taking a look at what your marginal revenue might be. But right now, I think one of the better tools for this is it actually allows you to take a quick look and see what the local markets here in San Angelo are on your phone. You can look at them about at least once a week anyway, seeing that we only have a weekly sale. But that app's available in the Apple App Store if you're interested in looking at that. I'm going to turn things over to Reed here, and then towards the end here, we'll open things up for questions to everybody.
All right, thank you, Bill. So Dr. Pope put these slides together and shared with us kind of his thoughts regarding the market, the wool market, and what's happening with COVID-19. This graph that you see is the Australian value of wool and the US value of wool over the last couple of years. And the main takeaway is we have seen a little bit of a slide in the market as of recent. So market volatility's kind of got people pulled back. The biggest drop in the US side, though, in that last week or two has been what Bill mentioned before, is the dollar got strong. And so that really devalued US wools. But you know, the bigger part of it is we've been sliding down the last couple of years since 2018, and most of that is driven by trade war issues and things of such. So next slide. The key points that Dr. Pope wanted to make is China is the largest wool processor, and as I mentioned before, the trade wars have already kind of taken a toll on the wool prices. And those tariffs of getting wool to processed into China. Another big take home is the strong dollar. So I think that's going to be an important point going forward. As Bill mentioned, in times of chaos, the world kind of flocks to the American dollar. And that makes other nations' wool and mohair more competitive. Next slide. Wool is selling in Australia. They're having weekly auctions, but in his view, it's not real benefit since it's not known if those wools can actually make their timely deliveries. Ron tends to be a glass half full kind of person, and the trade wars that have been happening has maybe brought people back to the attention of Eastern Europe, Egypt, China, and the U.S., the markets that they have to process wool and get it out there. So that is a positive as opposed to just looking at China particularly. But bottom line, wool and mohair, like any other commodity, it doesn't like the uncertainty of what's going to come, and so that's probably going to be reflected in the prices that may be really independent of true supply and demand. But the good news from wool is it's a non-perishable product. You don't have to put it in a freezer. You don't have to feed it in a feedlot. So what do people do? Shear as normal, follow good preparation practices, put it up the best you can. In down markets, it tends to be that the best prepared wools sell the best. So, if you can sort it and get it sorted and packaged properly, and it'll help you get it marketed in a down market. And we're still probably looking at $2 a pound greasy wool. So those users sharing 8 pounds, that's still $16. And so you should be clearing close to $10 a U, which is still a decent amount of money. So with that, we'll kind of move on and take on some questions. The best way to go about questions is to use the chat. That's an easy way that we can go through and I can kind of direct questions. There's been some people asking questions in the chat already. If you do want to, I believe you can unmute your mic and ask a question that way as well. One of the questions in the chat is the payroll protection plan will be available to ag producers or ag operations that have employees. I'm not up on that, Bill or Dr. Anderson. Do y'all want to take a shot at it? Or maybe we have somebody online. I know the American Sheep Industry Association has been, on top of this. I saw Peter was on earlier. Maybe he wants to try to address that.
And we got an answer from JJ Jones too about the payroll protection plan being available to ag operations that have employees, but the loans are not. We got another answer on that too, that you can't double dip from both of them. It looks like I'll see if anybody else has some more answers than that. A couple of good answers from some participants.
David, can you hear me?
I hear you.
Yeah, we did a meeting last night, and our tax guy said that, and he called me again this morning and was telling me that the payroll stuff is going to be available, but the loans, the 7A was available and 7B was not. But if you get to do 7A, the payroll protection, it's not going to count against you if USDA comes out with their farm disasters. They're not, so you can't double dip between those two programs. They're not going to count, against that cap that USDA usually has.
Thanks, JJ.
There's another question. Can we get a copy of all the presentation? We will be creating a YouTube video of this web broadcast, and that'll be posted. Once we get a link provided, we'll put it out on social media, and you can reach out to us and we can share that with you as well.
I'm happy to share my slides with anybody. Just let us know, and we'll get those things put out on our websites too.
I had a question about our app. It says coming soon for Android. We're still kind of looking for a tech savvy person to help us make that conversion. That's out of the realm of Reed and I. So we're still hoping to make that happen. But our timetable for that has kind of become pretty hazy.
And
So there's a question there about Rosen's situation affecting the East Coast market.
Thanks. I'm glad you brought that up. Go ahead.
And I'm gonna jump in on that answer. Then I'm gonna take it a couple different directions. One is, as many of you know, I think it's been in the press. Mountain States Rosen filed for bankruptcy. You know, I think, you know, one of the things, I guess one way I'd answer that is, you know, we have that going on, yet we still have operations going on. Yet at the same time, we have a new plant being built, but it may not be open for a while. And you know, latest projections I see, we've got a couple of months or so before it is up and running. Yet we also have, you know, supplying lamb from our packing plants, both carcasses and fabricated products to East Coast, for instance, East Coast restaurant chains, grocery store chains, to breakers, to fabricators who are going to take those carcasses and supply restaurant trade. So we've, you know, I'd probably suggest, you know, we have a lot of back and forth going there between them finishing up their operations that they're doing and filling what orders they do have, and then lots of other orders being canceled or no new orders coming in. So, you know, I think part of the answer there is really one of timing, and it's going to be pretty critical as to how those work out. You know, it's pretty easy to conceive to think about this, that, you know, we could have one plant shutting down before the other one opens, and we could end up in a situation with a real lack of packing capacity. Yet we've also got what happens with orders and how the next couple of months play out. You know, how long this shutdown in restaurants lasts, how soon we kick back into, you know, economic activity. So, you know, I think we have a lot of uncertainty in terms of going both directions, one from the packing side, but also from the retail side coming back to us. I'm not sure, you know, it's sort of a sorry answer to say we got a lot of uncertainty because there's not much definitive there. But, you know, I think that's part of this crisis situation that we're getting into an overall economy, yet how things move through the system as well. So, you know, both of those parts of that answer, I think both yield a lot more pressure, downward pressure on lamb prices going forward. At least that's my shot at an answer for Brady Rose's question. You know, I want to say something on the wool question. You know, I guess I had not looked at, you know, how much wool we have in storage. I think one of the things that's going to hurt in the wool market also, you know, is, you know, if we have so many people who are, you know, that normally work in offices working at home now, you know, I think that's probably going to hurt us in terms of a finished product wool demand as we look at suits and things like that. You know, a lot of us who do these Zoom things, we laugh about whether anybody's wearing pants because you can only see people from about here up. And so, you know, I think this is pretty hard on demand for wool suits and nice, you know, really nice clothes as well. I think we're going to have a demand hit on there in addition to, you know, income and GDP and stuff like that. We may have, this is going to be pretty hard on our end product use, I think.
Another blow, I think, to the wool demand is going to be oil prices where they are, making man-made fibers very hard to compete with. They're going to be cheap. The industry's done some amazing things with wool, but clothing manufacturers are going to see some cheap man-made fiber prices, I think, for a while.
There's a good question on wool LDP not reflecting market price. You know, one of the things that's been tried in the past is to increase the loan deficiency payment, you know, reflecting some increase in, you know, over time, both costs and wool prices. For quite a while, we've had wool prices, you know, far in excess of a loan deficiency payment that was really set, that loan rate set many years ago now. And so one of the things that's happened over time is, you know, costs go up, yet that that loan rate has not changed to reflect costs. We've been, really an inability to get that adjusted as some other commodities have been adjusted in terms of their farm programs. So, I think that's an ongoing problem. Took me a second to read this one. Yeah, I think that's a good question. We start looking at some of the cuts. As you point out, imported rack values are down. Shoulder prices are up. I look at like domestic product. I try to look at some of the cutout data that we have, some of that AMS data. I don't, it's not, domestic prices are not the same as those import prices as they come in for a variety of reasons. We've tended to have to compete against some, our domestic product has competed against cheaper product from Australia and New Zealand, whether it's racks or legs or whatever. We've tended to have to compete against a cheaper product. I think there's a variety of reasons. We talked about, exchange rates, hitting those rack prices, yet also kind of changing markets, whatever they're shipping to China or other places. There's a lot of indirect effects affecting those prices and imports, but the differential prices between U.S. domestic prices and import prices. I think one of the things we'll see is particularly the effect on racks and legs of the restaurant trade drying up. I think we'll see some real differential impacts of that versus some of the maybe shoulders or ground lamb, where those may, we may find some more movement there, whereas a lot of racks just end up going into cold storage and see how things shake out over the next few months. So there's an attempt at an answer.
All right. Well, I guess we're right at an hour. Thanks for everybody's participation and the questions that have come in. Again, we've been recording this, so we'll stop that recording in just a minute. And when that it's all published, we'll be sharing it, out through our social media channels. And if you want that directly, you can email us and we'll get it to you. So with that, have a great rest of your day. And let's hope Americans keep